The United Kingdom, a nation that has long been a global economic powerhouse, is facing a financial crossroads. As the world evolves, so do the challenges that every government must navigate. The question on many people's minds today is, could the UK go bankrupt? In a time when inflation, national debt, and global uncertainties are rising, it's easy to feel concerned about the future. However, despite these pressures, experts agree, the UK is not expected to go bankrupt anytime soon. But the country's finances are undoubtedly facing challenges. This documentary explores the factors shaping the UK's financial health, from public debt to government spending, and examines what these challenges mean for the nation's economy moving forward. While bankruptcy isn't on the horizon, a range of factors could lead to difficult times ahead if left unaddressed. The myth of bankruptcy in the UK. When people talk about a country going bankrupt, they often refer to the idea that a nation would be unable to meet its debt obligations and would default. However, in the case of a sovereign nation like the UK, bankruptcy doesn't work the same way it would for an individual or a corporation. The UK's national debt currently stands at approximately £2.5 trillion, and while it is high, it is not inherently a sign that bankruptcy is imminent. Sovereign nations can manage their debt in ways that individuals and businesses cannot, such as issuing bonds, adjusting taxation, or in extreme cases, printing money. The term bankrupt doesn't apply here in the conventional sense. The UK has a sovereign currency, meaning it can always pay off its debts in its own currency, the pound sterling. This gives the government flexibility to meet its obligations, even when its debt levels are high. Scene cuts to a chart showing the UK government bond yields. The UK government's debt is largely financed through the issuance of bonds, which are bought by both domestic and international investors. As long as investors believe that the UK government is credible and its debt is a safe investment, they will continue to lend to it. If we're talking about bankruptcy, there are two things to remember. One, the UK is in a position where it can still borrow. And two, the country has a well-established reputation in the global market. The Bank of England plays a key role in managing the economy, controlling inflation, and ensuring stability. The Bank of England's policies play a crucial role in maintaining this stability. Through its monetary policies, such as adjusting interest rates and implementing quantitative easing, the central bank has tools to address short-term financial instability. The growing debt problem. Despite the UK's ability to manage its debt, the reality is that the country's finances are under pressure. The national debt has been rising for years, a trend that was exacerbated by the COVID-19 pandemic. Government spending soared as the country provided financial support to businesses, workers, and the health sector. Chancellor of the Exchequer, Jeremy Hunt, has acknowledged the need for the UK to address its rising debt levels. But doing so isn't easy, especially when economic growth is slow and the global environment remains volatile. One of the reasons the debt is so high is because of the massive government spending during the pandemic. While this was necessary to support the economy and protect lives, it has left us with a significant fiscal burden. The UK's response to the pandemic, with schemes like furlough and business loans, was crucial in preventing an economic collapse. But now, as the recovery continues, the nation must grapple with the long-term effects of these decisions. The rise in national debt during times of crisis is not unique to the UK. Many countries increased their debt levels significantly during the pandemic. The question, however, is how long the UK can sustain this level of borrowing without it leading to long-term financial instability. Global economic pressures. The UK's finances are not only shaped by domestic policies, but also by global forces. The aftermath of the pandemic, combined with the ongoing war in Ukraine, supply chain disruptions, and the effects of climate change, have placed additional stress on economies worldwide. International relations expert. Global inflation, energy crises, and the shifting geopolitical landscape have had a significant impact on the UK's economic outlook. The UK, like many nations, is facing higher energy prices, inflationary pressures, and uncertainties surrounding global trade. Energy costs, in particular, have been a major source of strain for both consumers and businesses. The UK's reliance on international energy markets means that it is vulnerable to fluctuations in prices and supply disruptions. The cost of living crisis. For many in the UK, the rising cost of living is perhaps the most immediate financial challenge. Wages have not kept up with inflation, leading to an increasing financial strain on households across the country. Many households are finding it harder to make ends meet, with higher rent, utility bills, and food prices cutting into their budgets. These pressures have led to widespread concerns over the future, as many fear that the UK's financial stability is being undermined by these growing challenges. The cost of living crisis has led to protests and industrial actions across the UK. Workers are demanding higher wages to keep up with inflation, and businesses are struggling with the higher costs of doing business. This creates a feedback loop of rising costs and wages, which further strains the economy. The UK government is faced with a difficult balancing act. It needs to address the rising cost of living while also managing the national debt. In recent months, the government has implemented measures aimed at helping households cope, such as energy price caps and direct financial support for the most vulnerable. The government has introduced several fiscal policies aimed at mitigating the immediate impacts of inflation. However, many argue that these measures are not enough in the long term to reduce the financial burden on citizens. There needs to be a comprehensive strategy for growth, tax reform, and debt reduction. Cut to footage of a government minister speaking at a press conference. On the other hand, there are also those who believe that austerity measures, cutting government spending and reducing public services, could be part of the solution. Yet, such policies risk further harming the most vulnerable in society, which could undermine public support. One of the big challenges facing the government is how to strike the right balance between tightening the belt on public spending and ensuring that essential services are still provided. Reducing the deficit while ensuring that the economy doesn't stall is a difficult task. Conclusion: a path forward. The UK's financial situation is undoubtedly complex, and its challenges are real. But the country is not on the brink of bankruptcy. With prudent fiscal management, effective policy decisions, and global cooperation, the UK can navigate these turbulent times. Cut to a hopeful image of people walking through the city, resilience in their faces. The road ahead will be difficult, but the UK has the institutions, the resources, and the resilience to emerge stronger. The key will be how well the government can balance economic growth with fiscal responsibility and support for its citizens.